Hello everyone, Mike Arnold here, co-founder of Pat Trading Partners along with Bob Iacchino. So, another down day in Tesla, another down week in Tesla, back into oversold condition. But remember, that doesn't mean it can't get oversold more. Retesting this key trend line and the lows from earlier in the week. So we went up to a rotation zone and rotated back down. So we got that little minor rally and then rotated back down. All the major levels still staying the same. Next week, we'll be watching for about 260, then 255, this other trend line, and it happens to come in at 255, and then 249.63, so essentially 250. So 260, 255, and 250 are the key levels. On any rally, the 12.5% retracement from this sell-off is now coming in. We can even, I'm going to check out something else too. Let me just do... No, not that one. I want to see what the retracement just is off of this little one. So, off this little sell-off here, we have minor resistance now coming in at the prior swing low before this last one, coming in, what's that, about 270. The 25% retracement, which is a fairly common retracement, coming now in at the prior support level, now becoming resistance, which was tested yesterday. So we're going to call that about 277. And then major resistance coming in at the upper end of the rotation zone, about 283 to 284.50 area. Those are the key levels based off the daily chart. So any rallies, it's still in full-blown bearish mode with the rotation zone against us on the weekly and the daily. So any rallies are just watch for rollovers. You like them if you're shorting because they give you opportunity to short at higher levels and then peel off some profits as it rolls down. If you're long, well, there's the only bottoming signal that's potential, and this has to even confirm, would be this potential double bottom. That would trigger... It would be confirmed on a move above 276.45 and would trigger for us on a closing basis above that. And then I can map that out just so people are aware what it would be. So it would essentially be a full target. A full target would be the gap fill. So if we were to trigger that next week, or probably, yeah, it would have to be next week, so it could form a triple bottom. It'd probably be a full gap fill run up to the prior. Let me knock off the other levels here so we can see it clearly. So it would be stop reduction right at the top of the rotation zone. And again, this would be lower probability since it is against the rotation zone on the daily. Then the first target would be about 286, and the second target would be 289.44. But again, this is not triggered. This is not a long signal yet. And this is, again, also for educational purposes only. Let's check in on the weekly since it's the end of week wrap up. Let me see here. Let me get back to my little pointer. So this is now what? That 1, 2, 3, 4, 5, 6, 7 down weeks consecutive, and 9 of the last 10 weeks have been down in Tesla. That is very, very bearish. You can see on a weekly basis with the RSI we follow, very oversold. Again, does not mean it has to bounce. We do have that potential reversal signal that is not triggered yet, but this again can keep heading lower and lower. Tesla is very weak. There's lots of selling pressure still coming back in, and the bonds are not looking good either. But remember, we're still at levels of major support. Really, if this breaks below that 250, then it's time to really watch out below. If you're only trading from the long side, know where your stops are. Wait for high probability reversal patterns because this is very, very weak. If you're shorts, well, then you're liking this price action. And from a fundamental level, this can go a lot lower. It's still very, very, very fundamentally overvalued in my eyes and by a lot of people. So I'm not surprised to see it go down. Just depends on how you're trading into each and every day. That's what we have for you on this Tesla weekly wrap up, and we'll talk to everyone next week. Bye for now.